Hello, everyone, and welcome to another episode of Capital podcast series. This one will be in English, and I'm here with Robert Baker. Well, Robert Baker has been working here in on for quite a while already, and he also is a co-founder and partner at Nimbus Capital. So the idea of this was going to be an interview and podcast is that Robert can share with us not only what he does, but also how can it be interesting for different clients, the viewers that are interested in getting to know his strategy, his approach, and even consider the future potential investment in the fund if it comes to this. So thank you for the time, Robert. If you could please start with maybe your background, how you got to creating this very interesting product, and then jump into the process, the philosophy, and like whatever.
Absolutely. Thank you, Paulo, for having me here today. So, a little bit about myself. I'm Panamanian, born and raised in Panama. Then I went into my professional career in the United States for a little over 11 years. And in that time, I worked at a couple different funds, learning a lot about the capital markets, understanding how to invest in the structured finance world, if you will. I came back a few years ago back to Panama. I was had the privilege to get to be part of the Anon Capital team, and in doing so, I felt a good home here. And again, given I was always in the structured equity world, more structuring convertibles and equity-like investments, we decided with some of the partners at Anon to create Nimbus Capital. And Nimbus Capital is a private alternative investment group. It focuses on investing into the capital markets. So very traditional means. That means investing into public companies that have market caps anywhere from as low as 10, 20 million to as high to about a billion that are actively seeking to raise funds. Typically, these are underlooked and overlooked companies that need growth financing, for which then Nimbus can come in and provide that growth equity to them, right? At the same time, what we want to do is involve Anon Capital through some of the more vanilla or straight equity investments or those that Nimbus get into. But that in essence is what we're doing, is looking for opportunities. So we're very much deal guys, finding the right candidates for which we can invest capital into. And it's a very global approach. So we're looking at North America, primarily Canada and US, Europe, Southeast Asia, and Australia, all capital markets and all have different liquidity parameters and requirements for which then we adapt Nimbus's investment thesis into those markets. So that's a little bit about what we're doing right now at Nimbus.
No, very interesting. I think that we shed light on many different aspects of the strategy. Something would be interesting for the viewers to understand is when you say it's global, do you actually have any stated limits on certain geographies? So let's say in the US, you're probably going to be investing 50 to 70%, or is it more a matter of opportunities?
Yeah, it varies. Good question. It varies. It really depends on where we see demand for our growth equity investments that we can make. We like complex and cross-border opportunities. For instance, investing in Australia on the ASX, where we see a lot of mining opportunities, for instance. Sometimes we go into even more deeper countries where there's not many competition, markets such as Bangladesh, that's Pakistan, where their exchanges are very active, but there's not many funds that are taking the risk and investing into those markets. So it gives us the opportunity to really take a look at those very attractive deals that are on the place, but because of the high risk, because of the regulatory framework of those markets, it impedes other more traditional funds like those in the US to not really look at those complex markets, which then creates an opportunity for us to look at.
So when I say higher risk, I think question that would come to my head is say higher risk, higher return. No? So what's the expected target return for this kind of strategy?
I mean, listen, it varies on a jurisdiction by jurisdiction basis as well as on deal by deal basis, but essentially, we're always looking to as we structure the transactions, the investments, to protect our downside in those investments and participate in the equity upside. And how do we do that is by having those structured formats as we go through the legal documents and make sure that everything is on a protected basis to the investor to achieve this. But I would say, in essence, conservatively, a 20% return on an annual basis, and ideally above 35%, right, over a year-over-year basis. But it depends on the markets, depends on the cycles, bull runs, bear runs, a lot of
Of
different.
course. So you mean in a food business cycle that you
Yeah,
expect every time.
exactly.
And related to liquidity, since it's a small caps, no,
Yeah,
then sometimes you can go to nano caps.
that's right.
What's the typical liquidity profile of these companies? I know they're traded, but
Yeah. So one of the requirements for Nimbus is that we're mainly dealing in liquid securities. So all of our investments are either in the public equities, so the traditional micro, some nano caps and mid caps that are actively trading. And funny enough, we're now getting into the crypto space as well, where there's a lot of liquidity, exchanges that trade 24/7. And there's a lot of companies that decide to go public instead of issuing shares via capital increase of an IPO, a direct listing, or reverse merger. They're deciding to maybe go down the route of issuing tokens, right? And it's a way to attract more liquidity from retail investors all over the world, right? For instance, if you're an investor investing in the Spanish stock exchange, there might be some requirements as a Spaniard to invest into it, versus if I'm just a person that has an account and I can invest in crypto, you can invest from anywhere in the world, right? So that it gives us a lot of more flexibility when we look at opportunities, whether in public equities or in crypto, from a liquidity standpoint. So that being said, as long as they're listed and there's active daily trading, we can be very flexible, right? We're working in that liquidity. So it's a very subjective answer, but it just varies on the profile of the business. Is this a technology company? Is it generating revenues? Is it cash flow positive, et cetera, et cetera?
perfect. And just to understand a bit more, so how do you source these investment ideas? How it comes to you? Can I invest in this company? I'm gonna do a warrant or different type of structure that
Yeah, so great question. We get a variety of different opportunities from the relationships that we build across the globe. So we're actively reaching out directly to companies that are trading in those markets, utilizing Bloomberg, for instance, to source these deals based on specific parameters that we like. And then we reach out to them, right? We try to form a relationship. That's one aspect. The other aspect as well is creating relationships with individuals, with corporate finance, with investor relations groups, with guys and girls that are actively providing and looking for clients to bring capital to them. So we're potentially a source of capital that we can bring to them, and we all work together. So it's a relationship business making where actively we're speaking to people all over the world. And that's what makes kind of this, a bit of a fun ride, because we're speaking to Europe in the mornings, and in the afternoons, we're speaking to Southeast Asia. And it's almost like a constant 24/7 movement, as obviously you might know.
very interesting. No, and another thing that I think would be very interesting is also we talk about how it's sourced, but then the philosophy behind Nimbus is a analysis that is more, let's say, macro. You have a top down approach. Is it more bottom up? You don't really look at macro. You're more, um, let's say, aware of the fundamentals of the companies that you get into. Or is it a mix?
It's definitely a mix. I say that we're generally targeting, based on how the market is moving, right? And based on how the market is moving, I mean, what are the hot, sexy trends, right? If companies in artificial intelligence is kind of what's getting people excited, and it's putting more capital into those businesses via liquidity movements, right? Because everybody wants to be in AI, so we're putting more capital into these smaller companies, right? Not the big Apple, Teslas, Nvidias, but more so the mid cap, nano caps, which is where we play into. And that's where now we try to leverage on that surge in liquidity, providing capital, having maybe structured some warrants or options where then we can participate in that equity upside. So it's a combination of what's trending in the market, what's an attractive industry, how the Fed performs and how that affects everything in between. So there's not one single thing. It's just, a mix of everything, as they say.
And so you mentioned the Fed, and what are your thoughts now, or maybe your outlook with the new administration that just came in this year in the U.S. and how it is going to impact global markets as we have seen tariffs. So although we're talking about an administration on the U.S., the impact is global, right?
Yeah.
So you decide to manage investment in different jurisdictions. And is there any change in your outlook, or is there any peculiarity that you want to mention?
Yeah, good question. I would say that, well, first of all, with the new administration, personally, very, very optimistic with Trump coming in. I love how he runs, the U.S. He runs it as a business, which can be very positive in many things, and specifically when it refers to the capital markets. I believe that we will be entering into a global bull market, not only for public equities, but also in the crypto realm, as more and more of these different regulatory frameworks are alleviated in order to allow for crypto to become more utilized day to day, maybe Bitcoin becoming a reserve, right, for the US. But in any event, the point is that we're very happy about what's coming through. And through Nimbus's lens, we act on both sides, whether the market is doing very well and we participate in that liquidity, which is amazing, or counter-cyclical when we are entering into bear markets and companies are looking to raise capital because they require the liquidity. The liquid markets are a bit dry. That's where we then jump in, right? So that's kind of the beauty of it, that you can play as how the market is playing. Whenever something is more attractive, we pivot to that, and whenever it's not, we pivot to the other.
And which sectors do you think are more attractive at the moment?
I would say those that are capital intensive, right? So anything in technology, we like that spectrum. Anything from big tech, right? Anything artificial intelligence, semiconductors, edge computing, big data, we like all of those. In healthcare, I would say those that are in their phase 2, phase 3 trials. So biotechnologies, life sciences, pharmaceuticals, medical technologies, and then natural resources. I think there's always capital required there. Anything from metals and mining, oil and gas, renewables is growing at an all-time level. And the fourth category I would see is within the crypto realm, blockchain technologies and having utility tokens that allows companies to be able to grow because of having a wider spectrum of retail investors interested in their company via investing in their token. No?
No, very interesting. A question maybe that will be very interesting for our viewers, since most are from the Latin American region, where we have more presence. Do you have companies of the region, and what are your thoughts also in Latin America?
Absolutely. Actually, our first crypto company that Nimbus executed is a company based out of Colombia, company called Key, where we committed about $20 million to them. And it's a company that is still private. They'll be getting to that TGE, which is that token generation event, in which they'll be officially launching their Key token. And that is a great company that allows a lot of LATAM users to come in and participate and be part of the company's kind of ecosystem. But with regards to LATAM, being part in Panama, which is kind of the hub between North and South America, and bringing a lot of LATAM investors in, whether it's through Enon or maybe even through Nimbus, what we like is that there's a lot of companies that are coming around that want to go public and are now looking to go down the crypto route instead of the public equities, because one, the public equities is more expensive. And typically, if you really want to take advantage of liquidity, it's mainly a NASDAQ versus, for example, a Colombian company, Argentinian company, a Brazilian company can decide to just issue a token and gather the liquidity of the globe. And that is very, very attractive. So we're very much positioned and primed to take advantage of those new and upcoming LATAM opportunities, whether it's from a deal front or from investors that want to participate in those deals.
Oh, oh, great. I think so. What you mentioned is that in Latin America, there are very interesting deals, more on the crypto side, no?
Yeah.
And I think what you mentioned as well, where you can operate 24 hours compared to the traditional exchanges, that's a big competitive advantage, no?
Yeah.
So I think more like concluding remarks would be interesting to understand now if you could put, doesn't have to be very extensive, but why would someone, right, that has a portfolio that is diversified and wants to get even better diversified, why would he consider Nimbus Capital as a vehicle to allocate?
Yeah, great question. If, as a person that has their assets diversified, it's always good to have some amount in the alternative space, specifically within hedge funds, because you're able to, garner very attractive returns, right? Obviously, each fund manages their positions in their way, but at least here in Nimbus, we do so in a way where we're very conservative in our investments, but taking most advantage on those equity returns, right? And being able to hit, at least a minimum of 30% on a year by year basis would be very attractive. For instance, for last year, we were able to hit a little of a 40%, which was very attractive for us. And now heading into 2025, in this kind of new cycle, this new bull run, Trump coming in, we believe that, this is the best time for any type of investor that, for instance, is part of Inon Capital's diverse portfolio, maybe to put in some amount of funds into Nimbus to be able to take advantage of those more attractive returns.
Great. Oh, thanks a lot for all the questions.
Oh, thank you, Paulo. I appreciate it.
Very interesting to get to know Nimbus. I think there will be even more questions. We're always open to answer any questions I have. We'll leave also Robert's contact if there is any doubt. And well, thank you for your time.
Thank you.
Thank you for everyone for watching this episode. And keep tuned in. We'll be posting more videos in the following weeks.
Thank you.
The opinions expressed on this podcast are their own and do not necessarily reflect the values, ideals, or positions of Inon Capital.